In this video, I will be showing you how you could take $100,000 and in 18 months turn it into $460,000. This will be done by getting the correct entry on a LEAP option and then moving forward with selling covered calls against that LEAPs. Hello everybody, and welcome to the Trading with Ashley show. This video is going to be perfect for those of you that have been enamored by what you're seeing with selling options, but one of the things that's frustrating you is you don't have a larger account size to be able to sell options. So it may feel like that the dream of being able to retire trading is just too far away because you feel like you need a larger account size. So I wanted to put together something that gives you a hack that will allow you to continue to have the dream of retiring young and trading for a living, but it will do it in a way that requires a lot less capital. What I am talking about are LEAPs, long-term equity anticipation securities. No, that's a lot of fancy words, but you know me, I'm going to make it very simple for you. So what LEAPs are, they are a call that you purchase, and you purchase that call at least 1 year or more out. Now, I personally like to go further out, and you'll understand why when you see some of my positions. But what I'm going to show you is how some of these positions in just a short time have already been 100% of a return. So they have doubled in value. But that's not even the best part. So this is great for growing your wealth, but there is a way to produce income on these instruments we call LEAPs. Now, I like to wait to start producing income on them until they are in profit, and I'll explain why as we get into the mechanics of it. But you are able to not only enjoy the kind of returns that I'm seeing with a lot less money, but you can create income for yourself. Now, let's talk about what kind of market this works best in. Obviously, if you are wanting something to increase and you are bullish on the stock, it's going to work better in a market that is uptrending. And it's going to definitely work better as a stock is moving up. Now, a lot of you may wonder, gosh, how can I go ahead and load up on these LEAPs to produce income if I fear a market correction? Well, my answer for you is this. We are going to look at the key levels to actually get into the stock so that you are taking the least amount of risk possible when you are entering a position. But furthermore, I encourage all of my students to hold on to at least 25% cash. And the reason is, if we do have a downturn in the market, that cash will provide an anchor for you to be able to have funds to pull from, and it will allow you to buy some of these LEAPs at an even lower level so that you can enjoy the ride back up. Now, I would not encourage anybody to take all of their funds and dump it into the market at one time. The market is fluid. It's constantly moving up and down. And I know there's fears of a recession and all of that. So you have to look at what you have as a whole and consider how much are you willing to put into play. Now, I want to be very clear. There's no risk-free trade in the market. I see a lot of comments where people are saying, yeah, but what about the risk and what's going to happen if the market goes down? What's going to happen if the market crashes? I mean, if you're in the market, you are assuming some risk. But most of you are watching these videos because you feel like that is a calculated risk you're willing to take. So I want to be very upfront about that. Now, I have had a lot of luck over the last several years, and everyone has been calling for Armageddon. And I have been putting my money to work, and I have had cash to the side in the event of Armageddon. And it has worked out beautifully for me. And I've been trading for years. So you can be too afraid to actually take action. And if that's the case, then trading is probably not for you. Okay? But if you're willing to trade and you want to trade, watching this video will give you at least an avenue to retire young and be able to take a fraction of the cash to retire. First on my list is, let's talk about what stocks are the best stocks to actually purchase LEAPs on that you are going to eventually create income with. Well, I encourage all of my students to look for solid companies. think stocks like the Mag 7, Google, Amazon, Meta. You can even look at something like Tesla. It's pretty beat up right now. I'm going to show you one of my plays that's a leaps that actually is losing money right now. And then you can look at stocks that have a lot of growth in their future, like Palantir. There's a variety of stocks you can look at. But one thing to consider is I want you to definitely consider diversifying. So you're going to see my portfolio. You're going to see a lot of stocks that are running. I had great entries. I'm going to teach you how to get those entries. But if I had just put all of my money, let's say in Tesla, then my whole account would be upside down. But what insulated me from Tesla pulling down here recently is it was just one position. And I kept my position size very modest. And so diversifying all of your money over several different stocks, think maybe anywhere between 5 and 7, up to 10% if you're super bullish on a stock. But if you limit yourself to that, you will definitely limit the downside if you chose wrong on that particular direction of the stock. Now, I'm going to take you into the charts to show you the best possible time to purchase your leaps. Because like I said, entry is everything. And traditional wisdom would have you think when a stock is running up, it's the best time to go and buy it or to buy a leaps. And it's actually just the opposite. As long as it's a quality company, the best time to get in that carries the least amount of risk is if that stock has been beaten up and it's at the lower end of its trading range. So I'll show you exactly what I'm talking about. But then the very last part I think is going to be so eye-opening for you. Once these instruments are in profit, I am going to show you how to leverage them and create income by doing a poor man's covered call. And that is when you use the leaps that you purchased to represent 100 shares of the stock. Now you're able to go and sell shorter dated calls against the stock. But there's some very specific rules I want to be sure that you're aware of so that you have the least amount of risk when you are selling a poor man's covered call. The first thing I want to do is take you into my brokerage. I'm going to show you some of the leaps, and you're going to see firsthand how powerful these instruments are. So the first one I want to show you is Palantir. Now, I had purchased 5 of these call options. They do not expire until January of 2026, and I actually had purchased them probably about 3 months ago. So this is just 3 months of price appreciation. Now, let's kind of break it down. If I wanted to go buy 500 shares of Palantir, and that's what 5 call options represent, today, at the price that it is now, about $43 a share, I would have to shell out $21,500. Well, these 5 call options that I'm purchasing that mimic 100 shares of stock, they are valued at $12,612. So they are a fraction of the price of the actual shares. This is how you can use this to leverage the money you have to actually create more income than just buying the stock. Now, when I purchased these, they were about $1,000 each. And just in a few short months, they have doubled in size. And now they are worth about $2,500 each. And so I'm in great profit. So you may see this and say, well, Ashley, why don't you just close this down? I have so much time left in these, and I think Palantir will continue to rise. Now, it could pull back, and I could try to time my re-entry, but because I got such a great price for these, I'm just going to let this ride, and I will eventually start selling calls against it. I'm going to show you what I'm talking about, but let's look at this next one. This is MicroStrategy. Now, MicroStrategy has had an incredible run, and I was fortunate enough to get a great entry. Again, I'm going to show you how to look for the entry. This one does not expire until January of 2026, and for it, I paid about $7,000 for it, and right now it is almost doubled. It is almost worth $14,000. Now, if I went to buy MicroStrategy at these prices, it would cost close to about $21,000 for 100 shares. And here you can see that this right here, the $100 call, is valued at, almost half of that. So again, you can have your money work for you double in how it would if you were just buying the shares. Let's go look at another one. This one is NVIDIA. Now you can tell if you've purchased it versus sold it by whether or not it has a minus sign in front of it. When you buy a call in your broker, it's going to just have this numeral. If you sell a call like down here, or sell a put, you're going to have the negative in front of it in case you were wondering the difference. So let's look at this. This one is NVIDIA. It does not expire until June of 2026. So I have over a year and a half left with this particular instrument. And the beauty of this one is that I paid about $5,300 for it, and it's already worth $7,500. Now, I did not buy this long ago. I actually did a video not too long ago where I was talking about NVIDIA being at a strong level of support when it was at that 116 level, and I bought it at that point. So we're talking maybe 3 weeks is all that I've had this, and it's already appreciated 40%. So you can see the power of these right here. Now, this is a call option I purchased on Coin right down here, and it's already had great appreciation, but there's a lot more to go. But they don't all win. So I'm going to show you in my other portfolio what happened with a Tesla trade and, how I am considering recovering from that. All right, here we are in my other broker, and I'm going to show you two things. One, this is a Tesla call that I had purchased when Tesla was actually below $200 at the time, and I made it good till December of 2026. Now, even though Tesla has pulled back recently, this is doing great. It's 2,500 in the green because I had a great entry. Well, it is a longer dated call. It's a leaps. But let me show you this. You see this one? This one expires actually in a few months. This is Tesla December 20th, 2024. It's about the same level of a call. This one's 200. This one's 225. But look, this one is losing $2,700 because Tesla had a deep correction after the event. And so I'm going to hold on to this for a little while longer for recovery. But if it doesn't recover soon, I'm going to have to get rid of it, and I'm about to show you why. Okay, I am in the Robinhood platform to show you this part of how the trade works. This has everything to do with time decay, called theta decay. And when you buy an option, you, as the purchaser, you have to kind of sweat time decay because it works against you. Typically, I will explain that I sell call options and theta decay works in my favor. And so I'm going to take you into the trade and show you the difference in time decay with a longer term call versus a shorter term call. So right here, we are at the call that is making money. This is a buy call on Tesla expiring December 18th, 2026. And remember, we were at that $200 level. So I'm going to open up this trade and I'm going to show you something right here. Do you see right here, this says theta. Well, theta is how much time decay is built into each share of the 100 shares. And so at this point in time, we are looking at 0.04 cents per share in time decay that happens each of the days that I'm holding this. And right now, I have got 797 days left in this trade. So when you multiply this figure times 100, you're looking at about $4.50 a day. That erodes my particular call about $4.50 a day, regardless of the price action. Now, if the price is moving up with the stock, it can overcome this theta decay. But every day I'm giving up that amount just to hold this. But watch this. If I go to the shorter dated call that I purchased, December 20th, which is just 69 days away, and it was at the 225 level, so we're a little bit different in pricing, but close enough to illustrate my point. When I open this up, now let's look at this. This theta decay is much more aggressive. You can see right here, it's 0.159, so almost 16 cents per share. That's $16 a day, and I have another 69 days left in the trade. And every day that I hold it, it is eaten up by the theta decay at the pace of $16 a day. Now, this accelerates significantly once you flip to 45 days out. And so I must make a decision on this trade pretty soon, because once I get to a date that's closer, let's just go look. If we want to go, let's say a 20-day out trade, Let's go look at the theta decay on that one. That one was at 225. So let's go look at the same exact one, 225. Now look at this. This is $33 a day. So you can see how the closer you are to the expiration when you purchase a call, the more that you are giving up with time decay. So this is why if you are going to do a purchased call, I like going out a year or more because you have such a smaller amount of time decay and it allows the price to pull up and it can overcome the time decay. But it's really difficult to overcome something like this. I mean, we're looking at $33 a day. So Tesla's going to have to rise significantly for me to overcome this time decay with just 20 days left in the trade. Now, let's go back to my broker where I have these Palantir shares and let me show you what I can do to compensate myself for the initial purchase. Now, I've already more than made enough on this trade. You can see it's doubled in size. But what I'm about to show you can actually chip away at my initial purchase price of $1,000 per leaps, and I can have it 100% paid for by selling shorter dated calls against it. Now, this is something that is best done when a stock is at a certain point in its price life cycle, and I'm going to show you what I'm talking about. Here I am on Yahoo Finance, and I am looking at the chart that has some technical analysis tools I use. This is the Bollinger Band, and I also have some moving averages on here. So when I initially purchased my Palantir leaps, Palantir was trading much lower. Palantir was trading closer to around this $25 level. And so now you can see we're high above it. But I made the purchase when we were down low, and I noticed we were down low in the Bollinger Band at the time. And so I went ahead and decided to load up on this because I had a strong belief that Palantir would continue to rise based on how the company operates and what I've studied about it. Also, at the time of purchase, you see here on the RSI, it's at 79. When I purchased down here at about the $25 level, this RSI was much lower. It's called the Relative Strength Index. And anytime you are below 50 but close to 30, then a stock is in a state where it's a really good bargain to pick up. Because when you're at that 30 on the RSI, a stock is truly oversold at that point. And that's a great time to buy a stock. Now, most of the time when you see it at 30 on the RSI, it will be closer to the bottom of the band. So that was my entry. But now, if I'm interested in selling calls, let's look up at the top. I would be interested in selling calls, but I want to sell calls that are above the Bollinger Band because this stock is moving. Now, we are almost at 80 on the RSI. So anytime you are at 70 or above on the RSI, it's a good time to start thinking about selling covered calls. Because once you're at this level, that means you are overbought and the stock will typically retreat. And so I did sell covered calls on this, but I went high. I went up to $50 because I wanted to avoid having to have a situation where my leaps, which is a great price I got it for, where they're called away prematurely. So let's go look at how much I can get if I were to sell the $50 strike price on this stock at this point in time. Now, I'm looking at the option chain for Palantir. Just a reminder, every time you have a longer dated call option, you can sell shorter dated calls against it. But I will caution you, I would not consider doing that until your leaps is in profit, because if you have it unfortunately shut down prematurely, you don't want to owe money. And that could be the case if you end up having your strike price of your shorter dated call go in the money and the longer dated leaps has not yet gotten to a point where it's positive. So let's look at this. Is about a week out. This is October the 18th at the time of looking at this. If I wanted to shoot high to $50, then I'll look right here. Not a whole lot of premium. I could get about $5 for each of these. So that's a little low. And usually I like to be at around right under a 0.2 delta. And this is kind of low. This is at a 0.017. So there's very little chance in 1 week Palantir will get to 50, and I'm going to be compensated very little for that. So what I might want to do in this situation is go a little further out to hit this $50 level, but not too far. I would not go more than a month because you want the ability to roll. So let's look here. Let's go to the 15th of November and see what the $50 strike is offering. Okay, now we're talking. This is in a much better situation. We're a little bit tight on that delta. You see here it's 0.29. To be a little bit safer, you might want to go to 55 because that puts you below that 0.2 level, so make the trade safer. But there is a vast difference in premium. So if I were to sell $50 covered calls expiring 1 month from now, I am going to be paid $1.38 per share. So if I am dealing with 500 shares, because 5 contracts, that is going to end up being, for me, $690 that I can make for each month that I hold these. Well, that's pretty exciting because initially, I paid about $5,000 total. So if I wanted to operate this while I held these, I would just need to sell enough of them to where I paid off that initial purchase price of $5,000. So the way I would figure that is I would take $5,000, which was my initial purchase price, and I would divide it by $690. This is for all 5 of them. That would take me about 7 months to pay off the initial purchase, which is a great opportunity for me. And that means in 7 months, I could own these free and clear and be completely compensated. But you do have to be careful because if you were to say sell this $50 one and you get up here close to it at 49, even if you're 3 or 4 weeks away, if you start getting close to breaching that strike price, then you need to roll the trade. And rolling the trade is simply closing this one down, buying it back, and selling a new one that's further out and higher up. So that is definitely an important part of the maintenance of these trades. And you have to make sure that you're paying attention to them. If you don't have that amount of time, then you may just want to consider letting the longer dated leaps just run, and then you can just check on it every now and then. Now, let's do a little trade math, and this is going to truly blow your mind. I am going to use the example of Palantir just to show you what price entry can do for your account. So if we go back to this initial trade, each of these cost me about $1,000 each. Now I've got 5 of them. Already, just a few months in, we are seeing a 132% return. So to imagine that at the end of this expiration, January of 2026, that this is a 200% return, that is not far-fetched at all, and it'll probably be far higher than that. So that's the initial thought process. So $1,000 investment will more than likely easily become a $3,000 output because of the percentage return. Now, when we couple the covered calls that we're selling, if we are able to yield anywhere around $138 per sold covered call, then that is going to add to our return. Now, let's be conservative. It's going to take a few months for whatever call you purchase to get into the green so you can start selling calls against it. And not every month will yield the opportunity to make $138 for each of these calls. So if you assume that this 18-month instrument yields $138 12 months out of the 18, then that gives you another $1,656 per $1,000 spent. So at the end of this trade, if you add it all together, if my assumptions are correct, that $1,000 will be worth $3,000 from the leaps alone. Then the short-dated covered calls that I sell for 12 months out of the 18 that I own them will yield me another $1,656. Now my $1,000 has become $4,656. That is a whopping 365% return. I have taken my $1,000 and I have multiplied it by 4.6. This is a very powerful tool if you get the correct entry. You can also see how this can cut your particular number for retirement down significantly. As long as you select well and you have a very good entry on the stock, you can enjoy gains like this, and it will take a fraction of the money to retire. Using these figures, you can see how you could have taken $100,000 and purchased Palantir Leaps at the right entry and then started to sell covered calls against those leaps. It would have taken your $100,000, and in 18 months, potentially it would be $460,000. Now, a lot of you have expressed interest in wanting to be a part of my programs. I run a trading community where I am with the students throughout the day, and I go live twice a week, and I offer additional training. And a lot of you are interested in one of the last few boot camps that I'm offering for the year. But there has been some frustration because the calendar to actually book a call to get set up for these things has been booked through November. And it's very flattering, and I'm glad so many of you want to learn. So our solution to that is, if you are super interested in doing this and you want to be a part of either my Discord or you want to be a part of one of my last boot camps for the year, go ahead and send an email to the email that I'm going to put in the link, and then we will send you some information, and I will allow you to just go ahead and click a link to buy the entry-level program into my program. And then from there, you'll be in my ecosystem, and it'll be much easier for you to upgrade to higher tiers and to be a part of the boot camp. So I hope that at least solves some of the issue for those of you that are really anxious to get in and you're wanting to get this going before the market takes off without you. All right, I hope you found that helpful. Remember, if you are a part of my programs, if you're with Trading with Ashley, I can promise you this: there is no trader left behind.